Hey guys, Phil and Bob back with another Trade Genius podcast. A lot to cover in this one. We're going to dive into more about the fallout from the FTX bankruptcy and all of the different companies that are involved and why you need to be very careful with your crypto holdings. So without further ado, let's jump into this video.
Trade Genius.
Hey Phil, before we get into the videos, I just want to talk about a little bit about the action on the pricing this week in the stock market. One thing that people realize, we do this podcast, but we're traders at heart, and we have a really good sense of really market direction based on Fed liquidity, based on seasonality, based on probabilities, based on price levels, based on momentum. And we pretty much called the ball this week, Monday up, Tuesday up, Wednesday down, Thursday down. And this is the fruit of that for people. This is why we do it, to get these nice notes back from people. 66% return on a trade. Guy making 2 weeks worth of his income on a trade, and somebody else being able to pay for medical treatments for their family on a trade. And we do this all the time. And it's just nice when people come back and share these stories with us. And these aren't extraordinary trades that we did either, Phil. This was just normal, really a right-sized trade for the risk and basically outsized returns. And this was a short that we were putting in for the overnight. This is just puts. And then the market told us, hey, we need to start positioning for long again for tomorrow and maybe into Thanksgiving week. And we got people back on the train the other way. So I thought I'd share that with you. Thanks for letting us plug that. Trade with us, guys. Black Friday specials are running, and we'll really, really help you make money. But more importantly, we'll teach you how to trade and trade the right way. Now, back to this FTX thing. This stuff just writes itself for us, Phil. I don't know. I mean, we could probably run a 24-hour news service on what's going on with this thing, too. Our headline reference Coinbase. We're going to get to that. And that's kind of scary, too. A lot of lying and deception going on there, Phil. But why don't you kind of update us where we are with the FTX International and how this thing is starting to like pulling a thread out of a yarn here?
Yeah, so I want to be very clear how deep all this goes. And this is just a list of all of the companies that are involved. And, I think the bottom line is that if you've got coins on exchanges, and we're going to get through a lot of material here, but just get them off. That's the first thing I want to get across to you guys. Is get your tokens into your own custody until this dust settles. And really, you only want to have them on there anyway in case you're trading or you're getting ready to sell them or whatever. But if it's just a buy and hold thing, there's no reason to keep them on those exchanges. There's too much risk right now in the system. So here's all the companies that are basically not going to be getting money back or very little. And you have to wonder, what position are they in now? We're getting class action lawsuits against some of the celebrities that were pumping FTX, and basically now it's just being labeled as a Ponzi. Here's some just run through real quick on some of the more recent things. Temasek is an investment arm of the Singapore government, so taxpayer money. They spent 8 months of due diligence on FTX, and now they're going to just write off their $210 million investment in that. All right. Here's another one where came up recently this morning. Genesis suspends client withdrawals for their lending arm. This is really big because Genesis is actually bigger than FTX in terms of money out there. If you think FTX was bad, Genesis has way more in terms of holdings, $50 billion in loans in Q4 alone. So this is actually going to create more sell pressure, unfortunately, for the space. The parent company, Digital Currency Group, is actually trying to fundraise from sources we're hearing from today, and they're seeking a $1 billion credit facility. So what that tells you is there's a shortfall of $1 billion. That means customer funds that should be able to withdraw, they're short $1 billion on that. That's a huge discrepancy. And again, this is creating domino effect in the industry. And here's a list of those companies that Digital Currency Group is invested in. And you can read them here. I won't read them all off, but some of these are exchanges. Bitflyer is a Japanese exchange in the US. There's BitPay. They're a big payment processor, and they have the BitPay card, so you can basically withdraw cash from your crypto holdings as like a debit or credit card. I mean, these are pretty high profile companies that DCG is invested in, and we just don't know what if DCG goes under, what's going to happen? Remember, they're also involved with Grayscale and GBTC. And I think that's the big nuclear bomb if something should happen where GBTC has to, basically, now they're saying GBTC is insulated, but you know how that's been going lately. Everything that everybody says is insulated somehow gets uninsulated. So I think the big thing here is we hope GBTC doesn't have to sell off assets. That will create a significant amount of sell pressure because they own a chunk of the supply of Bitcoin. And then here's another issue I think that you guys need to be aware of, and why this is such an issue is that BlockFi, they've basically gone belly up. And the problem is that FTX was loaning out their crypto token FTT. Right. So basically you had this token, they created X amount, whatever they felt they needed to create out of thin air. And it was trading at a value, and that was what the market was demanding. However, when you're in a situation like this where the tide goes out and you realize that nobody has any clothes on, then the value of that token goes down very, very quickly, and it creates this domino effect. So this is where on the chart here you can see in the pink area, FTT tokens pledged as collateral. They're getting all these hundreds of millions of dollars of loan. And then you have down there $22 was basically their margin call level. And we know that because Caroline tweeted out to CZ at Binance when we caught wind that he was about to dump his FTT holdings because he found out they were pushing legislation behind his back against DeFi. It was basically letting FTX get like a regulatory monopoly on the crypto space. So he was like, forget that, I'm dumping my FTT holdings. I think he knew that would put them at a disadvantage. I don't think he knew it was going to collapse the entire infrastructure, though. So once she said, hey, we'll buy it for 22, which was a mistake because now everyone's got $22 target, right? So shortly thereafter, FTT breaks through that $22 level, and that's where everything started to unravel. So that's, kind of like how things unravel. You can see like you have this pledge of collateral, it loses too much value, and then everything gets margin called in a domino effect. Then we have the Coinbase CFO recognizing that we're in a contagion situation, likens it to the 2008 type situation in crypto. And so it's serious. And I think you guys have seen up until this point in this video where all the tentacles go in all these different companies. It's all intertwined. And so you have to be very, very careful here where you have your funds stored. Then interestingly, and Bob, you brought this up, they actually had said there was a small chance of bankruptcy, right? I mean, that's pretty crazy.
Yeah, she a little bit of truthfulness slipped out of her mouth there. But you know what? I think it was one of those planned things because if Coinbase goes down, she could say, hey, man, I disclosed that this was an opportunity for it to happen. So she was probably getting some internal pressure. Do not mention it. Do not mention it. She's like, screw that. I'm not going down. I'm not going to go down the route and be sitting in meetings in front of Congress, talking about why Coinbase went bankrupt in the United States. She can say, man, I called the ball on this. Now, the next slide you talk about was like, oops, maybe I shouldn't have said anything, and then her boss had to come out and try to smooth it over. And then back to you, Phil. These next couple charts screens are great.
Yeah, and so then all of a sudden Brian Armstrong sells over $1.6 million in Coinbase shares, and I think Nouriel Roubini chimed in. He loves to chime in on anything negative crypto, but it's true what he says here, though. A CEO never sells his or her own shares while shouting all is okay. A CEO selling shares expresses such a loss of confidence in the company. It is taken extremely seriously. I mean, yeah, you have to agree. And if he's selling that, he's probably expecting the shares to go a lot lower. And, maybe he's looking to buy it back when the dust settles, but that tells you a lot. You're probably not where you want to go long coin here, and which gets us into the coin chart. And I think, Bob, you can take us through this because you prepped this. So what's going on here on coin? Where are we going?
Yeah, so this is a long-term chart of Coinbase. I think this is a weekly. And so we're really sitting on the edge of the cliff. Now, when you guys trade these things on news like this, you got to be really careful because when negative news comes out, a lot of times an algo will come out there and try to beat you over the head with it by squeezing it. So, I think today Coinbase ended up, and what I'm looking at personally, Phil, is maybe next Tuesday, Wednesday, is to go ahead and get some Coinbase puts, just like when we bought Airbnb. And look what Airbnb did today, right? It basically dumped from 110 back to 101 over the last couple of days. So you got to let these these algo surges come through, but I think this thing can come down to, I think, what's that number, 123 area? A little tiny for me to see.
We're currently trading at 47.87, and you
Oh,
got an arrow
23.
pointing down to $30.
Yeah, $30. So that's the minus 0.23 fib. Yeah, so I think it's absolutely possible. Look, what's going to happen here, Phil? Human nature is taking over. I don't care if you love crypto, if crypto's totally in, Bitcoin's totally innocent here, and it's going to be come out stronger, better, faster, whatever. Human nature is going to say trading is going to collapse short term. The more and more they keep talking about these bankruptcies, then we're going to have hearings, and then we're going to have regulation. People are going to stop trading. People are going to pull their coins off of Coinbase too, and probably even Gemini, even though Gemini came out and said we're 1-for-1 reserved. And then you're going to end up, with this company not making money. And, they're highly leveraged. They have a low fixed cost business. So they're highly leveraged to transactions, Phil. If those transactions go away, their profit goes away. And I think this is a tremendous opportunity to short Coinbase. But you can only short Coinbase into these pops, and then then you can fall with the gravity with it. So That's why I put that chart out there for you.
No, thank you for that. So yeah, so anyway, we just wanted to give you guys kind of a quick update of where things are at. There's rumblings about Coinbase, and so even if they're in the US right now, I think you just are smart in getting your assets off. There's a lot of wallets you can get. There's Trezor, there's Ledger. Those are your hardware wallet solutions. Or simply just get yourself, you can get if you have to order those things, but you want it off, you can get software wallets. They're out there. Just Google them. Get it off, and then let the dust settle, and then we can go from there. But ultimately, you guys want to self-custody anyway on your holdings, and ultimately the hardware wallet is the best thing. And I think Best Buy now is carrying ledgers in stock in the stores, so you could literally just run to the store and get one. And it's pretty straightforward. The instructions are usually very clear. You set up your seed phrase, and then you can use that wallet whenever you want to store your tokens. And if something happens to that hardware, you still have your seed phrase. So that's actually the most important piece, is to keep that secure. So just we could probably do a video more in depth on that stuff, but that's kind of a rough overview and just kind of more of a warning to make sure that your assets are safe and you have control over them. So
yeah, and I want to say something about the seed phrase too. So don't just write it down on a piece of paper. I mean, we've had people that actually engraved it into metal.
Yeah. Don't scan it in. Don't put it on the internet. Don't put it in the cloud. You're literally supposed to just write it down, or if you want to engrave it and put it away. And I say put it in more than one spot in case, if you have it at your house and something happens at your house, or put it in a fireproof safe or something. But make sure that seed phrase, there's a, you're not going to lose that, because once you lose that, then if something happens to your hardware wallet, you're messed up. So
yeah. So anyway, thanks guys for listening. Like and subscribe this, and we got some really cool stuff coming up. Look, we're not all gloom and doom, but it's gloom and doom season right now. So the rule number one in trading is to don't lose money. So
Survive.
Where you are now is don't lose your mind over crypto. Get it out of there. Basically get into the foxhole and let the tanks roll over. You're going to have your day here in the future once this cleans up. So keep your head about you when everybody loses theirs, and you do that by not losing money.
All right. Thanks, guys. Thanks for watching. We'll see you on the next video. Take care.
Trade Genius.